We do it live. It is what it is. We do it live, guys. We do it all live. We'll talk a little bit about what happened here, but I'm on the struggle bus today, so welcome everybody. Bear with me, we're working through some technical issues, some reconfigurations that I was doing on my PC have caused tons of fun little problems. Like, for some reason, my 4K capture card is working as far as pass-through, and I can tell you it's working for pass-through because, well, back there you can see that the screen is on, so it goes into the cap card and then it goes out to that screen on the test bench. But the cap card is not actually showing up in like OBS or the 4K Capture Elgato utility or anything like that, so I don't know what I'm going to have to do there. And other than that, I had mic issues, which was fun. I think the mic's working good though, so you guys let me know. I was up till 5 in the morning working on this PC, so we'll give you guys an idea of what happens there. I'll talk a little bit about it, but we have a little bit of a longer show. There's lots of stuff going on, so hopefully we will be able to see how that all functions. All right. I think we got the shares out everywhere. Let's get going. Let me make sure the audio sounds good before I go that away. It looks like I got the profiles all set up. All right. Yeah, we did. All right. The mic sounds good. Here we go. Get my monitor up. There we go. Hello and welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by Blind Run on the internet and Matthew in real life, and today, do we have a doozy? First of all, sorry, apologies for being late, but that's just the way it's going to go because I was up really late working on my PC, and I started too late, and that's never a good idea. And I know better. I'm old enough to know better. But I also don't handle those all-nighters as well as I used to. That being said, we're going to be talking about Bitcoin's inverse correlation with inflation-adjusted bond yields, and that's in response, of course, to Bitcoin dropping below 20K as recession concerns weigh on financial markets, as well as the euro nearing dollar parity. We have Uniswap user losing $8 million worth of Ethereum in a phishing attack. So beware of phishing attacks. Celsius reclaiming 410 million of staked Ethereum tokens. A new update from Firo. There's a update from Firo coming out. A new update or the quarterly report from AnetaBTC. I am enjoying their transparency, so we're going to be talking about it. We're going to be talking about the crypto mining profitability depending on your geographical location within the United States, as well as U.S. and South Korea to cooperate over the Terra investigation. Ethereum 2.0 contract is now observing only 32 ETH deposits per day. So it's slowed down as far as deposits for Ethereum 2.0 quite significantly. GPU-Z has an update as well as SRB Miner. So let's get into it right after a word from today's sponsor. Please work. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking, to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. Boom, and welcome back, everybody. Thanks for stopping by here when lots of other news is going on in the world, but I assume those hearings for January 6th are quite boring, and a wrap-up will be suffice to get an idea at the end of the day. So if you're here anyways, thank you for being here. SRB multi-miner CPU and AMD GPU miner update 21 hours ago. They added an auto tune for dual mining, and they added a parameter, GPU dual max loss, which defines the maximum loss of a 0 hash rate we allow while auto tuning in dual mode, defined in percent. So if you don't want to lose essentially any hash rate on your main algorithm, you would type in, of course, the percentage after the GPU dual max loss. That's pretty clever. I like that. It says, here's some more info on the auto tune. AutoTune will try to find the best intensity value for the second algorithm, which heavily depends on the core clock of your GPU, and we're all aware of that. Higher the clock, probably the higher the intensity value will be. I guess we say we're all aware of that. I should be better about clarifying that. The reason is because for dual GPU or dual crypto mining on a single GPU, the way that works is it's usually going to be a memory intensive algorithm and then a core intensive algorithm. So you are going to have essentially something like Ethereum paired with, like previously, Toncoin or Caspa or Alephium. Those all are essentially core focused algorithms, and that's why you can basically dual mine, is because Ethereum, for example, doesn't use as much core. That's why, to drive down the power consumption when we're tuning for Ethereum, we lock the core voltage and core clock within our overclocking settings. Now, if you're going to dual mine, obviously what you want to do is remove those core clock limits so that the core clock can go up. Of course, this is going to cause your power consumption to go up and your heat to go up, which can be problematic in the summer when you're talking about mining. So for me personally right now, we're not dual mining because, frankly, anything that I add on heat-wise or power-wise is a huge detriment to my farm at this time. But that's kind of the relationship there that you need to be aware of. You can set the maximum loss of hash rate in percent you allow for the first algorithm by using their GPU dual max loss parameter, which accepts a number between 1 and 90. Default of this value, if not set, is 5%. So you could lose basically a ton of hash rate potentially if you just left it at the default, right? Dual Ethereum Caspa example, allow max 10% loss in hash rate. Oh, no, sorry, 5% is lower. So the higher you go, the more loss. Got it. So disable CPU, GPU auto. There's just an example here, and you can see the max loss allowing for up to 10% loss when mining Ethereum with Caspa. So that is what you're looking at as far as all of that is concerned. I think it's pretty cool stuff personally. So obviously, I think SRB Miner is kind of one of the first to do this, and so they are kind of on top of the game there. So why was I late? Well, I was rebuilding my main PC, so here's a picture of it. We did it live on twitch.tv/blindrun. We were live over there till 3 a.m., and then I ran into some issues afterwards. Some of the changes to the main PC that I made is that we added in, I needed some more hard drive space. So we actually transplanted into a silent case, which has been actually, it's functioning great right now. I can't even hear the PC, whereas before we were hearing fan noise that was bleeding over into the mic. Of course, that's still not going to stop the kiddos from bleeding over into the mic, but it's a little bit better. I didn't do a great job on cable management. I was just kind of like, eh. The thing about this particular case is there's no side windows. This is a Antec a P101 Silent Guardian, and the reason for utilizing it is because it has up to 8 hard drive bays. Of course, the 3090 is a little too big for the 8 hard drive bays, but that's okay because we only have 6 SATA ports on this Gigabyte Aorus Z960 Master. So I was going to run 6 anyways, and they're just 2 terabyte, 2.5 inch drives from Seek8, and they are in RAID 5. So I have another additional about 8 to 9 terabytes of data on the system, which I needed because we kept running out of space for all the scratch files because we are absolutely destroying it with amount of content that we're putting out right now, which means like I just need more space, not only on my Synology where I move everything at the end of the day, but also within the main rig. So I had a Premier cache drive. Part of the problem with the mic settings and stuff was that I was moving stuff over to different drives and so on, and I moved some of the configuration files unknowingly at first. We have 32 gigabytes of DDR5. That is starting to become a problem when live streaming some of the new games on a single system. And then we took out the Gigabyte GPU and we put in the best 3090 Founders Edition that I have in my farm. So I went out to the farm and just found out which 3090 was performing the best. This one was, so I pulled it out, cleaned it up a little bit. You can see there's still some dust around it, but cleaned it up best I could and then smacked it in here. And then we got the Elgato 4K 60p capture card, as well as the Elgato Cam Link or Cam Pro or whatever. They're both PCI. Those capture cards are amazing. Of course, my 4K capture card for some reason is not working right now. We have a 12900K in here, and it was overclocked, but I turned off the overclock when I was troubleshooting, so I'll have to go back through and do that. It is cooled by a Lee all-in-one cooler. By the way, this all-in-one cooler is pretty amazing. It keeps the 12900K at under 50C all the time in Texas, even in this case. And it's super silent, and that's kind of what I was working on. What I ran into, though, is that I was making some configuration changes, and I was setting up the RAID 5 for the drives. And when I was doing that, at one point I cleared out the settings for the on the CMOS, and I had BitLocker enabled, because you should have BitLocker enabled, by the way. I think no matter what. Now I had my BitLocker recovery key, which was fine, but I ended up running into the bug where you got stuck in the BitLocker recovery key loop on Windows 11, which is a new thing that I didn't know about. Every other time I've just typed in the key and then we've been good to go. So I couldn't really figure out exactly what was going on. At the end of the day, what I figured out is that there was a problem with building the RAID and letting it fully initialize in the BIOS before booting, essentially, because every time that I would try to like unlock the BitLocker, it would jack up, and because the drives were still initializing for the RAID. So that's kind of what I found. It took me until like 5 in the morning to figure it out. That's why we're late today, but anyways, I'm happy enough with it. My goal right now is to sell a couple 3090s, and I do want to get water blocks for the 3090s, and we'll go custom loop. Probably not in this case. Actually, for sure not in this case, because with two 3090s, we will need essentially two 360 millimeter radiators. I have water blocks or water cooling parts for everything but the water blocks. So I need a water block for LGA 1700 and then the two 3090 water blocks. I have another Founders Edition 3090. I think it's going to cost like probably $1,000 just for water blocks though, between the 1700 and the two 3090s. So we'll probably pause on that for now. I do have a 1600 watt EVGA power supply available, but in this rig right now, there's a 1000 watt P2 platinum rated power supply, which is plenty for this particular rig. So that's what I was working on, if you guys were curious. And we got some new updates from GPU-Z, which is cool. GPU-Z update brings Arc, GeForce, and Radeon improvements. The GPU-Z now supports a GeForce GTX 1630 graphics card, thus far the slowest model released in 2022. I haven't picked one of those up yet. With this update, one can now verify how slow the bandwidth is on the card. RIP mining on the GTX 1630. Furthermore, this update brings support for newly released 6700 non-XT graphics card, which I was not aware of this release. Were you guys aware of this release, by the way? I did not see the RX 6700 non-XT anywhere. I was trying to find it to see if we could purchase one. But I can't find it anywhere. That's an interesting release that's supposedly coming up, and I found out about it through this this post. So apparently there is support for it, and that recently released. In any case, this SKU is now slowly coming to other markets. It says, we are not sure why GPU changelog specifically mentioned Sapphire model while there are other cards such as Power Colors. In any case, this SKU is now slowly coming to other markets, which means that more and more users will have access to a cut down Navi 2020 or a Navi 22 GPU on desktops. They said that there's also fixes for the RTX 3080 12 gigabyte model, which for some reason was listed as non-light hash rate card. And yes, it does have light hash rate. Interestingly, GPU-Z developers also continue to fix errors for quite old GPUs, such as the 7800 GS. And to add to that, the ATI cards will no longer show the AMD logo. So I guess they're showing the old ATI logo, which is kind of cool. So as far as their changelog, it's all listed here, but we kind of got the big information of a RX 6700 non-XT, which I'm curious about the specifications on. I think we'll have to go ahead and take a look at that here near the end, hopefully, and then go from there. I don't know that you need it to run like a 6700 non-XT. I think you would, or XT, I think you would want it to run as a 6700. Let's see if the main AMD website has information on it. Not even the main AMD website has information on it. It just has the 6750 XT and 6700 XT. So, oh, here we go, right here at the bottom. Let's see if we can get the specifications for this. And the specifications that we're interested in, of course, is going to be the memory, which is going to be GDDR6. It says effective up to 1 terabyte. Of course, we know that that is not what actually happens for mining. So the memory bandwidth is 320 gigabytes per second over a 160-bit bus. If we compare that to a 6700 XT, let's go ahead and get down here. It's going to be a little bit slower, as the 6700 XT has a 192-bit bus, and you cannot flash that to fix that memory interface, by the way. So 6700 XT is definitely going to be faster for mining, but with the cut down of the core and the rest of that on the 6700, it's not necessarily going to be a bad miner. You could probably get some pretty good power consumption out of it. But I have not seen this anywhere for purchase around. When I do, hopefully I'll have enough money to purchase it and get you guys a mining review for it. Let's go ahead and talk about Ethereum. Ethereum 2.0 weekly deposits have slumped to the lowest ever. Weekly deposits of the Ethereum 2.0 staking contract have been going down recently due to the plunging price of ETH and are now at the lowest value ever. As per a report from the analytics firm Glassnode, the ETH 2.0 average deposits have sharply dropped off recently as the crypto's price has been in free fall. The ETH 2.0 staking contract is a smart contract where users can lock into their Ethereum to become a validator on the proof of stake network and earn rewards for it. However, a minimum of 32 ETH must be deposited to the contract in order to stake on the network. Nonetheless, staking pools exist where users with less than the amount can collectively stake with others. During 2021 and 2022, many found the contract lucrative as the weekly average 32 ETH deposits usually stayed around 500 to 1,000 per day. This has changed recently, however. The below chart shows the trend in Ethereum 2.0 staking contracts since January of 2021. And it's going down, as it should, by the way. As you can see in the graph, the number of Ethereum 2.0 deposits per day, 7-day average, has been going down in recent weeks. The value of the metric on the 3rd of this month was just 122, which is the lowest ever in the history of ETH 2.0 staking contract. The report suggests that this recent slowdown in the indicator is because of the falling price of ETH, which has now gone below even the 2018 all-time high. Here's a chart that shows how much of ETH 2.0 deposited supply has been in profit recently. The ETH 2.0 supply and profit has been trending down since the start of 2021, and today only 17% of the total deposited supply is in profit. Much of the supply that's in profit at the moment was deposited at the start of 2021 or earlier when the price of crypto was less than 1K. 83% of the supply being underwater probably explains why Ethereum 2.0 contract deposits have been very low in recent weeks. At the time of writing, Ethereum's price floats around 1.1K, up 4% in the past week. Over the last month, the crypto has lost 32% in value. Below is a chart that shows the trend in ETH price over the last 5 days. Obviously, people are not investing in Ethereum because of the price and they're scared of that. But I think on a more practical level, if you take a look at Ethereum and the promise of basically being able to unstake your ETH post merge, that's proving out to not be the case, and people are becoming aware of this, right? As we've seen in the roadmap from Tim Biko, one of the core developers of Ethereum, you will not be able to extract your Ethereum post merge, and that will come at a later date. This obviously is problematic for people that want to be able to capitalize on, of course, the price pump of Ethereum when it merges, because there is an assumed price correlation or price increase due to the merge actually taking place and being successful that people are relying on. That's kind of a problem too, because if we really pay attention to it right now during a bear market, there's not much of a possibility of Ethereum going over its all-time high just due to the merge. And that's what would be preferred, right? And this is because just because of the bear market, you aren't going to see a huge increase in the price of Ethereum just due to one upgrade when the rest of the market is tanking. And that is going to be a problem for most people. It's actually incredible that more people were investing, though, at the time when it was high, as opposed to being when it's lower, and only 17% being in profit is quite scary for a lot of people, I'm sure, because at an investment right now, you're still at around $30,000 to $32,000 for a full stake, and that's quite expensive for most people. U.S. South Korea to cooperate over the Terra. U.S. and South Korea to cooperate over Terra investigation. South Korea and the United States have agreed to share investigation data about the Terra network crash. U.S. and South Korean authorities have agreed to collaborate on the investigation of Terra's implosion, South Korea's Yonhap news agency reported on July 6th. South Korea's Justice Minister Han Dong-hoon I'm sorry. It's just, I'm already bad at pronouncing names, and when they're funny to me. Met with Andrea Griswold, co-chief of the Securities and Commodities Task Force, and Scott Hartman, chief of the Secretaries and Commodities Fraud Task Force at the U.S. Attorney's Office for the Southern District of New York. Yonhap news agency added that the two countries agreed to share investigation data about the Terra Luna network crash, which led to about $40 billion in losses. South Korea is investigating the possibility of fraud, tax evasion, and market manipulation on the parts of Terraform Labs, while the U.S. is probing Do Kwon and whether Terra USD breached certain regulations. Meanwhile, Terra's crash has birthed new crypto regulation efforts in several countries. South Korea has formed a new crypto committee to assess the crypto projects listed on crypto exchanges. In the U.S., there are reports that the government is working with Congress to formulate new stablecoin legislation that could come into effect before the end of this year. The United Kingdom government proposed several legislative amendments for crypto firms, including stablecoin issuers. Singapore's financial regulator is considering new blanket regulations to protect retail investors. Remember, be careful whenever they say to protect retail investors and they throw all that FUD out there. That is just code for we want to control what's happening here. And they're going to use examples like Terra Luna to basically be able to take control of it and add in more regulation. Meanwhile, the EU's market in crypto assets framework seeks to impose redemption reserve requirements on stablecoins to cover withdrawals, as well as a threshold for the daily transactions for the largest operators. So they also want to basically start putting in withdrawal limits on the public, which is to be expected because, you know, if you try to go withdraw too much of your own money from the bank, they won't let you do that because that's too much money for you, not for them. All right. Crypto mining profitability varies wildly based on location. So this is a fun one. A recent report from 9/11 Metallurgist explored the cost and profitability of crypto mining, finding that mining one Bitcoin will set you back anywhere between $1,400 to $246,000, depending on where you are. Cryptocurrency miners are considered one of the main drivers behind the crypto industry, but the latest market downturn has put the profitability of the once lucrative business into question. Falling crypto prices and rising electricity costs around the world mean miners operate on a very tight margin, and some might not even be profitable at all, according to a report from 9/11 Metallurgist on mining costs. The report estimates how expensive it is to mine the top three most popular proof-of-work currencies, Bitcoin, Ethereum, and Dogecoin. The research considered the average price per kilowatt hour in every country in the world and then compared it to the energy required to mine every one of those tokens. Subtracting the average market price for the token left researchers with a rough estimate to how profitable mining is around the world. And this is an amazing chart. Now, you guys have probably seen the one for like, they also broke this down into essentially multiple regions. So you can go look at like individual costs within the United States. And for example, like the United States, like average is 21,000, but if you go to like Georgia, it's 13,000, right? And so if you, and not Georgia, the country, which apparently is the same as Georgia, the state, because it's at 13,000 too, but Georgia, the state was at 13,000, which is one of the cheapest. I believe Texas was around 16,000 with Oklahoma being around 15,000. And so there was a few good ones. I think Idaho looked really good because it's nice and cold up there. And it was also pretty low, around 14 to 15,000 per Bitcoin. But they have it all marked out here, and it's absolutely insane. I love this chart. So much information here. It does vary extremely widely, so it's really going to be dependent on where a majority of the hash power is. And if we look at that, we know it is the US. And so we know that the average cost to produce a Bitcoin in the United States is 21,000. And that is right on par with what I would assume we sit at with the bear market, meaning we can go down a little bit, but we'll come back up to 21K. We can go a little bit over, but we'll come back down to 21K. And that'll continue until the next halving of Bitcoin. And that's because obviously, like, the United States has a ton of hash power, I think 40% right now at this time. Bitcoin mining has been a highly contested topic lately, with many governments and environmental organizations criticizing its high energy requirements. And while the majority of the data shared by critics could be characterized as misleading, there are countries in the world where mining Bitcoin is both economically and energetically unfeasible. According to research from 9/11 Metallurgist, mining 1 Bitcoin in Venezuela costs over $246,500. The latest market downturn has pushed Bitcoin's price down to around $20,000, making Venezuela the worst country to mine Bitcoin. Mining ETH in the country is profitable, but with just an estimated cost of around $1,000 and ETH's price now standing at just above $1,100, miners would be just able to break even. Small island nations who have lenient tax laws made them a popular destination for crypto companies aren't that welcoming to mining. Mining 1 Bitcoin on the Solomon Islands currently costs around $142,500. Antigua and Barbuda, Micronesia, Kiribati, Marshall Islands, Maldives, Samoa, Vanuatu. I don't know some of these, actually, to be honest. The Dominica and Tonga all have extremely high electricity prices that render Bitcoin mining impossible. Mining a single Bitcoin in any one of these nations costs between $70,000 and $89,000. Countries with cheaper and more abundant electricity, however, make crypto mining an extremely profitable endeavor. Kuwait is the most profitable country to mine Bitcoin. With the report estimate, it costs around $1,390. At the current market price of just over $20,000, this is a profit of $18,610. In Algeria and Sudan, it costs between $4,200 and $4,800, with both countries providing a profit over $15,000. Yemen, Ethiopia, and Kyrgyzstan require around $7,160 to mine a single Bitcoin, while doing the same in Angola and Qatar will set back miners $7,360. Once accounting for over 3/4 of Bitcoin's entire hash rate, China is no longer the mining hub it once was. The ban introduced the country's central bank in 2021 has exiled all mining operations in the country. While some moved to the neighboring country, Kazakhstan, or moved to it, to make use of the country's abundant coal-powered electricity, many were eyeing less popular locations with cheap electricity. Some countries anticipated an influx of miners and were expedient in passing laws that banned mining before any major operations were set up. Iran, home to the 14th lowest electricity prices in the world, imposed a temporary ban on Bitcoin mining after an influx of farms caused multiple cities to suffer rolling blackouts. Kosovo, a Balkan state whose independence has been highly contested, provided Bitcoin miners with the perfect combination of cheap electricity and political instability that led to it becoming a hotspot for mining. Kosovo's coal plants provide the 16th cheapest electricity in the world. However, the ongoing dispute between Serbia and Kosovo about the sovereignty of the land led to dubious agreements that left it to local governments to absorb the cost of electricity for Kosovo's northern part. Essentially, free electricity made Kosovo a particularly attractive destination for mining in the past several years. But coal plant outages and the rising costs of imported electricity forced the disputed country to introduce an indefinite ban on mining, according to Reuters. Mining 1 Bitcoin in Kosovo would currently cost around $10,560, introducing a profit of over $9,500 US. Following the controversial mining ban in China, a significant number of large mining operations sought refuge in the US, seeking vast land, good infrastructure, and low electricity prices. Many miners relocated to Texas and Wyoming. The abundant power in both states means mining 1 Bitcoin costs around $16,500, presenting a profit of around $3,500, even with Bitcoin's price hovering around $20,000. However, despite the growing number of miners relocating there, Texas doesn't offer the cheapest electricity in the U.S. Instead, the cheapest electricity can be found in Louisiana, where mining 1 Bitcoin costs $14,995. Other Midwestern states like Arkansas, Wyoming, and Utah require around $16,500 to mine 1 Bitcoin. Also in Louisiana, not only do you have the heat that you have to worry about in Texas, but you also have the humidity for your hardware, which is why like most of the farms in Texas are in like West Texas where it's drier, or like north in Dallas where it's drier. Plus it's cheaper electricity usually there because they have all the wind farms, etc. Despite the cost of mining Bitcoin being roughly in line with the national average, Georgia has reportedly emerged as the primary crypto mining hub in the U.S., Bloomberg reported earlier this year, citing cryptocurrency company Foundry that miners in Georgia accounted for over 34% of the computing power in its pool, which accounts for 17% of Bitcoin's total hash rate. The outsized mining activity in the country is due to favorable regulations that allowed mining companies to purchase cheap solar and nuclear electricity from nonprofit organizations in the area at about half the price. Mining 1 Bitcoin with power from Georgia's power grid would cost just over $13,000 according to 9/11 Metallurgist. And as you can see here, they have the Texas break, or the U.S. breakdown, excuse me. And like I said, okay, so Texas around 16,000, Oklahoma around 15,000, Idaho's around 15,000, and that's up north, which is kind of nice. Wyoming too, at 16,000, I believe. Bits is somewhere in that area, which is probably extremely nice to be in that area. And then Georgia at the lowest of 13,143 due to, like they said, those special deals with nonprofits. If you're in Hawaii, Alaska, California, you're probably, struggling. New York has highly increased its price, but up north there are still the hydro plants, but we know all those bans are kind of going into place. It's up to 29,000 for the average. So Massachusetts, extremely expensive. All the northeastern states, pretty expensive to mine a Bitcoin outside of profit, right? So some of these are within profit, some of them are outside of profit. The average, like I said, around 21,000, which is going to be relevant, I think, to the price of Bitcoin during the bear market. That's how I see it. So there you go. Forever Metalhead says it doesn't cover his area. We have a new announcement from AnetaBTC, and they released their quarterly report. I appreciate this kind of transparency, so I want to cover it. Aneta is a token on the Ergo blockchain that you can receive additional rewards while mining. So that has been one thing that I have been doing personally on the Get Block pool. So this article breaks down their first quarterly report, which highlights the assets held in the Aneta Liquidity Fund and provides both a summary of the quarter and their outlook moving forward. The rest of this article will explore what to expect and how to get involved with the community. The cryptocurrency market has always been subject to significant volatility. Factors such as consumer and investor sentiment, legislative directives, network security, media coverage, etc., all play a critical role in market prices. Thus far, 2022 has been marked by events such as the Terra and UST debacle, centralized platforms such as Celsius pausing customer withdrawals, and bankruptcies such as the Three Arrows Capital and Voyager situations. At AnetaBTC, however, we believe there will be many positive highlights surrounding their project. We were able to make a strong development progress, both directly on the wrapping protocol and also in regard to general infrastructure on Cardano and Ergo that we believe position us strongly for the future. In addition to these developments, we were also able to acquire what we believe to be some of the best digital assets through various revenue-generating avenues on the Aneta Liquidity Fund. Currently, there are at least 5 avenues of revenue generation, including but not limited to Neta 1, Neta 2 stake pool rewards, Erg mined with the AnetaBTC Smart Pool, liquidity providing rewards, yield farming rewards, and 100% of the royalties on all Aneta Angels NFTs secondary sales. Each of these has been implemented in a manner where, despite the current market conditions, the Aneta Liquidity Fund is able to continue accumulating assets without the burden of any debt. If we're talking about something that's really interesting, is Aneta coming out basically in a bear market. This is their first quarterly earnings report, and this is them surviving a bear market, and I think that's extremely relevant. We believe that continuing to acquire these assets during the downtrend, along with the long-term prospects of our protocol, puts us in a strong position to be a major player in the Cardano and Ergo ecosystem moving forward. Below is the list of all assets held by the Neta Liquidity Fund as of July 6th. So complete transparency, their net value is $1.5 million essentially at this time, with a bulk majority of it, I believe, being in, let's see here, CNETA on the Cardano blockchain. Neta not being too far behind on the Ergo blockchain at 370,000. And then their ADA CNETA liquidity pool has 207,000 in it. Their Neta liquidity pool is up to 92,000. And then, of course, they have 158,000 in Cardano, and they actually have more in Ergo at 170,000, primarily probably due to the miners hopping in and helping out with that, to be honest with you guys. The Neta Liquidity Fund currently holds approximately, and they give you guys all the information as far as that goes. And then their liquidity provider LP pools, they have, of course, their ADA, CNETA, and MIN liquidity pools, and then their Neta Erg liquidity pools. Currently, the tokens represent, and that's pretty much all everything that they are staking. Of course, these are not static numbers of tokens, as the number of these tokens fluctuates as the ratio of the pairs change on decentralized exchanges. At the current ratios, however, those would be the total amount of assets if liquidity was withdrawn from the exchanges. Throughout the quarter, 10% of revenue was used to buy back Neta and CNETA as laid out in our initial LISO article. A total of 44,000 ADA and 7,000 ERG were used to acquire Neta and CNETA. Throughout each quarter, we will continue to buy back Neta and CNETA with 10% of the revenue that is generated by the project. They say, thanks for reading our first quarterly report, which tracks the total assets held by Neta Liquidity Fund. Our community fund collectively owned 100% by Neta and CNETA holders. In the coming weeks, we plan to launch our first governance token where holders of Neta and CNETA will be able to vote on if we should acquire more assets or continuing acquiring the current assets laid out at the conception of the liquidity fund. My 2 cents, like the way I'll vote, is for them to just continue with the current assets, because I think spreading it out too much can hurt the rest of the networks, but that's just me. Anyways, I think that this was pretty awesome of them to release those quarterly reports. I'm pretty impressed with the first quarter success that they've had. You know, generating that kind of net value is impressive. And it's not obviously as high as like a lot of these other projects, but it is the most transparent. That being said, we also have news from Firo today. Firo has gotten listed on 7B. So you can actually use the 7B trading app to buy Firo directly with US dollar. It says Firo trading, no matter what amount you want to trade, it's $50 or $5,000 in Firo. Firo trading remains attractive for any strategies and deposits. Firo volatility gives opportunity for speculation trading, and Firo speculative trading is kind of risky, but there is no profit without risk, so Firo trading is for the brave. They say where to buy it. There are many places where you can buy Firo: exchanges, instant swap services, wallets, etc., and those services provide users with the opportunity to buy or sell Firo. However, every platform has a different way of doing things. Their interface is often very complicated for simple users, and therefore you need to spend a lot of time dealing with it. Some services do not allow users to buy Firo directly. You'll need to create a wallet, then buy the first crypto, and then use it to buy Firo. With the 7B Android crypto trading app, you will be able to buy Firo in a few easy steps with US dollar, euro, and GBP, other fiat currencies, and more than 400 cryptocurrencies on multiple blockchain networks. So if you're interested in the way how to buy Firo, you're in the right place. 7B app is one of the best places to trade, buy or sell Firo with their user-friendly interface, blah, blah, blah. It's an advertisement for this wallet. I have not used this wallet, and I do not condone this wallet because I have not used it, right? So I don't know anything about it as far as 7B goes, but having a US dollar pairing with a smaller cap cryptocurrency like Firo, I think is relevant. So definitely go check it out. They may have others on their network too that aren't available elsewhere. Celsius reclaims 410 million of staked Ethereum tokens after paying down 81 million debt to Aave. The embattled crypto lender Celsius is inching closer to fully paying off its loans from decentralized finance protocols, reducing its outstanding debt to $59 million. That's actually kind of impressive what they've been able to pull off here. Celsius Network, one of the crypto lenders facing liquidity troubles in the industry's ongoing credit crisis, appears to have yet again used its maneuver on a decentralized finance protocol to free up hundreds of millions of dollars of trapped collateral. Transactions on the blockchain show that the wallet linked to Celsius transferred $81.6 million in Circle's USDC stablecoin on Tuesday to the automated decentralized lending protocol Aave. The move reduced Celsius's debt to Aave to $8.5 million. Crucially, the transfer freed up $410 million in staked Ethereum, or ST Ethereum, a type of staked Ethereum token that Celsius had pledged as collateral against the loan on Aave. The ST ETH tokens are a derivative version of Ethereum blockchain's native token ETH. Each ST ETH token represents one ETH locked up on Ethereum's upcoming proof of stake network. We've talked about all the problems with this and, of course, depegging worries and DeFi contagion, etc. in the past, so check out the old videos on that. The ST ETH token has been at the epicenter of the liquidity crunch in crypto markets after its price deviated from the supposed one-to-one peg to Ether. At press time, ST ETH trades at about 3% discount compared with ETH. Celsius is one of the largest single holders of ST ETH with at least $426 million of the tokens, according to blockchain data firm Nansen's portfolio tracker. The stake represents almost a tenth of ST ETH's total market capitalization at $4.4 billion. More water. Celsius, which at one point managed over $20 billion of client deposits, is one of the crypto lenders that suspended withdrawals to prevent a run on its deposits. It also laid off 150 employees and hired restructuring advisors, as CoinDesk reported. The down payment represents another maneuver by Celsius to reclaim collateral by paying down debt to decentralized finance protocols. Last week, Celsius paid off its $228 million of debt to Maker, another DeFi lending platform, and got back $440 million of collateral in the form of wrapped Bitcoin, a Bitcoin derivative blockchain data shows. After that, Celsius started to make good on its loans from Aave and Compound, paying down $95 million of the debt by Monday. At press time, Celsius still owed $59 million to DeFi protocols, according to data on crypto data tracker Zapper. $8.5 million to Aave and $50 million to Compound, with $28 million and $199 million locked up on the platforms respectively as collateral denominated in various tokens. Should Celsius pay off the remaining debt, it could theoretically reclaim the combined $227 million of digital assets to boost its liquidity. The downside here, though, they're using their clients' money to do this. They've locked the withdrawals. So it's kind of crappy, right? At the end of the day, what they've done is lock the ability of anybody that's invested in their platform from being able to withdraw at a time when they could go completely under. And like we know from the new updates to terms of service from companies like Coinbase, that collateral that you have locked up in a centralized entity could end up being utilized to pay off debts in the result of a bankruptcy. And so to basically prevent your customers from being able to withdraw, bodes very little trust in the company, in my humble opinion. So even if they get all the debt paid off, once they unlock it and people can start withdrawing from Celsius, you end up in a position where I think they will have lost a lot of end user trust and will end up in a bad position either way. Let me know what you guys think in the comment section, as well as the live stream chat surrounding that. Uniswap user loses $8 million worth of Ethereum in phishing attack. The attacker enticed users with a fake Uniswap airdrop message. A Uniswap user loser, Uniswap loser, lost over $8 million worth of Ether Tuesday in a phishing attack that saw the attack deploy an airdrop bait to trick users, security researchers said. According to tweets by MetaMask security researcher Harry.eth on Monday night, some 73,399 wallet addresses connected to Uniswap were sent a malicious token masquerading as a Uniswap token airdrop based on the liquidity pool positions on Uniswap version 3. Information in the malicious smart contract led to a website that imitated Uniswap domain branding. You guys got to be careful with this, man. The message claimed to airdrop Uni tokens to liquidity providers based on the number of fake LP tokens they received. Liquidity providers supply their assets to or on Uniswap in return for a reward. Interacting with the phishing message, however, gave the underlying smart contract permission to transfer assets out of and gain full control of a user's wallet. One person who was providing over $8 million worth of wrapped Bitcoin and USD coin to a wrapped Bitcoin USDC liquidity pool, according to blockchain data, unknowingly interacted with the phishing message. Why in the world, if you have that much money in a smart contract, would you ever interact with it on the same wallet? Like, dear Lord, that's so painful. I mean, phishing is going to happen. But like at least like maybe do it with something that doesn't have $8 million worth in it. I'm just thinking. The attacker was able to gain control of the wallet, exit the LP positions, and transfer the tokens to other wallets. Blockchain data further shows the attacker started to move stolen funds through privacy protocol Tornado Cash in the early Asian hours on Tuesday. In the hours following the attack, Binance founder Changpeng Zhao alerted users to be aware of possible exploit on Uniswap. This was, however, later corrected as the exploit was limited to a phishing message and did not affect the Uniswap protocol, as Uniswap Labs CEO Hayden Adams confirmed in separate tweets. Once again, like, this one's interesting because this isn't a not your keys, not your crypto problem. This is a phishing problem. And this is just users needing to pay attention to what what they're interacting with. A great way to prevent this, obviously, is making sure that you essentially bookmark the actual addresses for any of these particular DeFi protocols like Uniswap so that you don't end up going to the wrong address and ending up interacting with a fake Uniswap. That's one thing that's a problem. But even then, it can be a little tricky too, because as we've seen with things like QuickSwap, they end up having DNS hacks on their end. And if there's a DNS hack, all the hacker has to do is set up a copy of the website and have you connect through the smart contracts there and redirect the official domain to their own website, which has happened before. So it's a very tricky spot to be in when you are messing with it. So make sure you, I know, for me, I have some of these set up, like Ergo Address, for example, to where I pay attention to any changes that are happening to DNS as well, so that I don't end up participating in some sort of phishing attack or a DNS redirect or anything like that. Be careful out there, boys, though. Obviously, phishing emails are going to be out all over the place because we've talked about, some of these entities sending out or getting their emails hacked. And then what happens is hackers will use those email lists to basically spin up phishing attacks everywhere. So don't click anything in your email, don't click links in your emails. Pretty much is the end of the story as far as that goes. Be extremely careful there. Bitcoin drops to 19.7K, 19,700. There we go. Whoo! As recession concerns weigh on financial markets, euro nears the dollar parity. Singapore state-owned investor Temasek said it sees more broader market declines in the coming months. Bitcoin has dropped through a major support level Tuesday, falling below the $19,700 mark amid a sell-off in broader markets that saw equity indexes decline and the euro approach parity with the US dollar. Price charts show Bitcoin saw rejection at last week's $21,800 level. It experienced some support at $20,500 over the weekend and dropped to $19,700 mark in early Asian hours on Tuesday. A brief bump up to almost $20,000 was followed by a return to the lower level in the European morning. Bitcoin could drop as low as $18,700, a level it reached earlier this month, technical analysis shows. A recovery from current levels, on the other hand, could see Bitcoin climbing as high as 21,300 zone in the coming weeks. The declines came as Singapore state-owned Temasek Holdings, which manages more than $287 billion of assets, cautioned of more downturn across financial markets, citing the likelihood of a recession in developed markets. Temasek said it forecasts a mild recession in the U.S. next year, adding that China faces challenges and the global economy is in a fragile state. They went from there is no such thing as a recession, there's no such thing as inflation, to maybe there's going to be inflation, to maybe there's going to be recession, to now there will be a small recession. Be very careful with this. This means that we're probably going to hit not a mild recession. And this isn't financial advice, but it's just like it's always day by day inching closer and closer to the truth, which is a possibility for a very, very impactful recession, right? And I like just pay attention to it as they keep moving the bar a little bit. They're trying to basically just ease you into the idea of a really, essentially, I think, a depression at the end of the day, potentially, right? Rising inflation, surging commodity prices, and severe supply chain bottlenecks have uncovered further fault lines in the global marketplace, it said in a statement. The euro dropped to a 20-year low of $1 and like 0.02 cents against the dollar, approaching parity. The weakness arose amid concerns of an energy crisis stemming from Russia's invasion of Ukraine that would tip the region into a recession, while the US dollar was buoyed by expectations of the Federal Reserve committing to faster rate hikes. Equity markets also suffered. In Asia, the Hang Seng Index fell 1.26%, while Japan's Nikkei 225 dropped 1.75%. The Stoxx Europe 600 index fell 0.6%, while Germany's DAX lost 1%. U.S. futures on the NASDAQ 100 and S&P 500 fell 0.68%. Some Bitcoin investors see more reasons for a decline than a rebound. Quote, an additional reason has strengthened our view that the upside will be capped in the near term. This is the news about Mt. Gox releasing approximately 140,000 Bitcoin in August, end quote, QCP Capital Trader said in a Telegram broadcast on Tuesday. Our main takeaway is that there is a high chance of Bitcoin supply flooding the market soon, they wrote. The possible impact would be additional selling pressure on Bitcoin and perhaps the outperformance of ETH and altcoins against Bitcoin. That would be extremely interesting too, because that would be against what you would expect, which is altcoins following Bitcoin, especially in this type of scenario in a bear market. All righty. So, Bitcoin's inverse correlation with inflation-adjusted bond yields record high. The real yield has surged by over 170 basis points this year, putting pressure on risk assets, including Bitcoin. Bitcoin's fortunes are more closely tied to the U.S. real or inflation-adjusted bond yield than ever, with the two increasingly moving in opposite directions. That's against what we would expect, of course, if we considered Bitcoin as a hedge against inflation. At press time, the 90-day correlation coefficient between Bitcoin and the yield on the 10-year U.S. inflation index security stood just shy of the record 0.95 reached at the end of June. The record inverse or negative correlation means Bitcoin is moving in the opposite direction of the inflation-adjusted yield. A correlation coefficient is a number between 1 and -1, representing the linear interdependence of two variables or sets of data. If the correlation coefficient is -1, it means the relationship between the two variables is negative 100% of the time. If the number is at +1, the two securities move in the same direction. A positive real yield means the bond payout is exceeding the market-based measures of inflation expectations. Therefore, the higher the real yield, the lesser the incentive to chase returns from other assets like cryptocurrencies, stocks, and gold. So it's no surprise that Bitcoin technology stocks and gold have taken a beating this year alongside an uptick in real yield. The real yield has surged by more than 172 basis points to 1.72% this year, thanks to the U.S. Federal Reserve's resolve to drain liquidity with rapid-fire interest rate hikes and balance sheet runoff to fight rampant inflation. While the leading cryptocurrency by market value has dropped nearly 57%, the tech-heavy NASDAQ index and gold are nursing losses of 27% and 5.2% respectively. The record negative correlation means the possibility of Bitcoin plunging below the June low of 17,601 cannot be ruled out cannot be ruled out should the real yield continue to rise. And to the dismay of bulls cheering the bottom signals on blockchain indicators, the path of least resistance for the real yield appears to be on the higher side. That's because inflation is showing no signs of slowing down, and the Fed is unlikely to apply brakes to policy tightening anytime soon. The Fed is likely to raise borrowing costs by 75 basis points later this month, bringing the benchmark interest rate to a range of 2.25% of 2.25% to 2.5% from 0% to 0.25% at the start of 2022. Further, the Fed funds futures have priced a 50 basis point hike in September and a 25 basis points hike at the November and December meetings. On Wednesday, the U.S. Labor Department is scheduled to release June's Consumer Price Index figure. The data is likely to show the cost of living rose 1.1% month on month, bringing the annualized figure to a new 4-decade high of 8.8%. The CPI stood at 8.6% in May, and the core inflation data, which strips out the volatile food and energy component, is seen rising 0.6% month on month, amounting to an annualized growth of 5.8%. On Monday, White House Press Secretary Karine Jean-Pierre said the Biden administration expects high inflation mainly due to high food and energy components. Pierre, however, called the data backward-looking and out of date in a bid to control the damage, noting the recent decline in energy prices. Therefore, a weaker than expected core CPI figure might pull down the real yield, lifting Bitcoin and other risk assets. Bitcoin was last trading near $19,650, representing a 1% drop on the day, according to CoinDesk data. I think what this means is tomorrow what we will see is more information based on the U.S. Labor Department and their consumer price index figure, and then that will affect the markets one way or the other, and then we'll see how Bitcoin responds to it. Bitcoin will go up or down tomorrow depending on the news, essentially is what I'm saying. Let's get into mining profitability for the day after we run an ad, and thanks everybody for sticking around and showing up for the late stream. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking, to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. All right, and welcome back, everybody. Yes, you do need to pay attention. Like I said earlier, and I know I see in chat CPI isn't real inflation. Right now, what they're trying to do is make the public ease into the reality of a recession, depression, potential, a recession for sure, a depression, potential, and they don't want to scare everybody and make them freak out and cause even more shortages at this point. But I did get a lot of rigs back up. We have 12 rigs running right now. So we're at 3.5 gigahash a second. Yes, our reported is off. We have an unpaid balance of 0.02. I believe we were paid out yesterday, but remember yesterday we were shut off between 2 p.m. and 8 p.m. I'll be monitoring today. And we have quite a few rigs offline. I'm going to be slowly adding them back on just to make sure that I don't have, I'm going to make sure that I basically take this time with the heat to go ahead and adjust that. But yeah, I mean, it's not good payouts, right? Of course, we had a payout yesterday for $22 and a payout today for $24 so far, with about another 20 bucks in the bank on the unpaid balance for today. So, you know, maybe we'll do like 40 bucks, something like that. Of course, we don't have to pay the power, so that's good as far as that goes. I thought I had some Neta up, but apparently the Neta miners are not mining, so I'll have to go back out and see what's going on there. Or we're having more API difficulties over at the get block page. I really wish they would kind of maybe reel back a little bit on how fancy the page looks and just get the data that is needed out to us, because that is my biggest frustration with get block, is like, if I'm going to show you guys what we're making and all that, like how can I do that if the API is down half the time? Yes, it is showing 2 workers online, and it's showing payments in the last 24 hours of 579. Of course, we were down for a little bit. You can always click on the payments and bring up the earnings report, and it'll show you, like on 710, we did 2,356 Neta. So we were down on the 11th, so I don't believe we really got many payouts at all from that, but we're back up and running for now. As far as profitability on it, it's not really going to be much, right? We do have an unconfirmed balance though here of 2,583, so it does look like it's catching up as far as payments go. And then we also take the hit on both of these pools for being turned off because we are, you know, they are PPLNS style. Technically, Crazy Pool's DPPLNS, but that still affects you for how many. I think if we do have like rolling blackouts and stuff like that, I'm going to try leaving like 1 rig or at least 1 GPU on each pool that I'm mining on. I think that will be my strategy. Just leaving like maybe 2 rigs on, one on, or if I'm mining multiple coins, one on one coin, one on the other coin, just to maintain the connectivity to the pool, so that we don't end up in a position where we're earning less due to the fact that we weren't, because it will consider us as pool hopping. I'll be going over more of that strategy as we get closer. You know, it's a bob and weave situation trying to figure out all of this stuff right now. But if we take a look at what to mine, we can go ahead and calculate out the RTX 3090 with adjusted hash rates on ZIL Hash, Kapow, ProgPow, and Firo proof of work. It does put Neoxys still in first right now at $2.09 a day in revenue and $1.30 a day after power. With Ethereum coming in second, a drop from yesterday at $1.95 a day in revenue and $1.19 a day after power. Ravencoin in third at $1.92 a day in revenue and $1.13 a day after power. Firo in fourth at $1.89 a day in revenue and $1.10 after power. And in fifth place, wrapping it up for the top 5, Conflux at $1.64 a day in revenue and 85 cents a day after power. We talked about Firo in their listing today, and they're at $1.52 a day in revenue and 77 cents a day after power. Flux is at $1.36 a day in revenue and 66 cents a day after power. Ethereum Classic, $1.35 a day in revenue and 58 cents a day after power. And Ergo, thanks to its good power, actually does beat out Ethereum Classic after power, but at 71 cents a day, but in revenue is short by a penny at $1.34 a day after power. That doesn't include Neta rewards and the boost of 15% though, so keep that in mind. Let's take a look at any major changes in hash rate happening. Bitcoin is down about 10 exahash. It's at 210 exahash a second. I wonder how much of that is due to, of course, the request in Texas to shut down power yesterday. Let's take a look at Ethereum. It's at 943 terahash a second, so it is down as well a little bit since yesterday. Ethereum Classic probably going to be 23.6 terahash a second. Let's take a look at Neoxa and see kind of if it's studied out on difficulty, etc. It's steadily growing in hash rate. Kind of interesting here with the difficulty starting to rise again. It rises again. Let's take a look at Ravencoin at 2.43 terahash a second. No real changes. Let's take a look at Flux. This is going to be at 1.25 mega solutions a second. No real changes. And Ergo, which is having a nice little difficulty drop, and it's at 12.1 terahash a second. But you can see here that there has been a recent increase in the amount of hash rate on their network. Mining pool profitability for the last 90 days, Crazy Pool in first, Ether Mine in second, F2 Pool in third. For the last 60 days, ZET in first, Crazy Pool in second, Ether Mine in third. For the last 30 days, ZET in first, Ether Mine in second, Crazy Pool in third. For the last 21 days, Crazy Pool in first, Mining Pool Hub in second, F2 Pool in third. For the last 14 days, Crazy Pool in first, Mining Pool Hub in second, F2 Pool in third. For the last 7 days, ZET in first, Mining Pool Hub in second, F2 Pool in third. For the last 3 days, ZET in first, Mining Pool Hub in second, F2 Pool in third. For the last day, Mining Pool Hub in first, Crazy Pool coming back finally in the top three in second, and ZET in third. ASIC mining profitability. Let's go ahead and take a look. I expect that L7 to really be in first place. It still is. Of course, there is the E9, but they don't ship until the 15th. That will be in about 3 days. I'm hoping to get my hands on one through somebody for a review for you guys. Of course, be careful purchasing them because we do have the merge coming up. And the only other thing they can really mine is going to be Ethereum Classic, which means there's going to be a lot of ASIC mining competition on Ethereum Classic. That being said, the Antminer L7 is really the next best bet at $19 a day. The KD6 is down to $13.21 a day. And the KD5 is down to $7.96 a day. The S19 Pro at $3.34 a day. Now, if we take a look at pricing, they are starting to adjust on btminers.com, but not a ton, right? So if we go down to the ASIC miners, the S19 Pro dropped another $300 down to $4,300. The S19 Pro J Pro is the same price for the 104 terahash model. So pay attention right there, right? When you're looking at those. The V1 Mini actually went up in price from $700. And the LT5 has had no real change. So there you go. The biggest price drop right now is on the S19 Pro 110 terahash model, and that is down from 4,600 to 4,300. As far as all that goes, let's get into questions and answers. Remember, super chats are never required, always appreciated. First to be answered because they're the easiest to read. Tagging at Son of a Tech will highlight the message orange, and then I'll be able to answer it. If you do not tag at Son of a Tech, there is no guarantee that I will even see the message. We'll show these and get scrolled up. Remember, the best way to improve the algo is super stickers, and the best way to support me directly is through sonofatech.locals.com. Hugo Down says, Son of a Tech, Neta just added 5 million more Neta to the contract and reduced the bonus to 10%. If info is on GetBlock's Discord. Oh man, I was on GetBlock's Discord just this morning, and I was trying to pull up and make sure I didn't miss anything, but we obviously missed something. So thanks for letting me know. Let me get on GetBlock's Discord. Maybe that's why they're having API issues as well. Where are you, GetBlock Discord? Let me get this pulled up. They don't have anything on their Twitter yet, and I don't know why I don't have the Discord pulled up. Oh, here we go. Bam. All right, so thanks for bringing that to my attention. Let's go ahead and get that covered. GetBlock.io miners have no fear. The AnetaBTC team is supplying an additional 5 million Neta to the smart pool so miners can continue mining as we complete phase 3, which they say is soon. The new reward structure will reduce to a bonus of 10% additional mining rewards. So there you go. You are continuing to get additional mining rewards through Neta. And then I'm excited, of course, for that particular phase 3 is really what I want to see, because I wonder how the Aneta Angels are going to play into that. That's really what I want to see. We have a 199 super chat from I Prefer Pie. Thank you, good sir. Says keep on keeping on. We'll keep making it. We'll keep being here, you know, as it goes on. Xcraft LLC says, Ask Ametech DDR5 at anything other than 4800 doesn't seem to be stable yet. Yes, sir, that is true. You can, though, like in my experience, you can turn up to, like, I have admittedly not great DDR5. It's like the Micron. But if you apply, there's a BIOS update for the Gigabyte models that you can apply basically a DDR5 timing settings for Micron, or there's other various ones in there too. And if you up your voltage, like on the Micron, I'm able to get to 5200 megahertz at 1.3 volts, but you do have to go up from the 1.25 in the XMP profile to actually hit that 5200 megahertz. Hugo Down, thanks for the $5 super chat. And your mileage will vary, right? Some memory is not going to ever hit above 4800 megahertz. I just was able to hit it with 1.3. So, you know, it's like, it's not guaranteed. 4800 is pretty much, if you want stability, just lock it at 4800 and roll, right? Hugo Down says, Ask Son of a Tech, GetBlock is having issues. Yep. Detroit Iris says, Ask Son of a Tech, having similar issues with GetBlock. We're all having issues with GetBlock. It sounds like because they're updating that smart contract, it appears. Part of it could be that. Zyg Miner says, Ask Son of a Tech, do you think the RTX 40 series to be better on core-based algorithms than the 30 series? For the core-based algorithms, I am expecting the 40 series to be much better, yes. Because we are getting that 2.5 gigahertz, but pay attention to the AMD GPUs as well on the core, because those core improvements are going to be twofold. You're now getting a multi-module, like a multi-core module. So you're basically getting a chiplet design for the first time ever on GPUs. And in addition to that, they have already figured out how to break the 3 gigahertz barrier on the core clock, meaning if we're looking at core intensive algorithms and traditional rasterization, it looks like the 7000 series is going to be even better than the 4000 series, right? So 40 series, yes, better than 30 series. But if we're looking at the actual specifications of the core, it's looking like the 7000 series from AMD is actually going to be even better. Obviously, driver issues, traditional with Radeon could completely just throw that out the window, but it's something to keep an eye on. IATG 2001, thanks for the $4.99 super chat, says Ergo seems to struggle with hash rate increases. If they fix that and make it easier to convert to USD, they would be a nice ETH replacement. So as far as the conversion to USD, it's really not bad with KuCoin. You just have to pay attention to that $5 flat fee of USDT when you extract. But I have a liquidity guide already on Ergo. I don't find it to be that difficult. In fact, it's on par almost with Flux. I'd say Flux, like obviously, so liquidation ratings, right? So I kind of have this set up, and I'm actually working on a chart right now too, for all the other altcoins. And this is kind of what I've been playing with, right? Is like, how easy is it to liquidate? How easy is it to run from an infrastructure standpoint? So on and so forth. I'll give you my top like 3 kind of for each, right? So Ethereum Classic, the easiest to liquidate because it has the most interoperability across different chains, wallets, exchanges, and so on. Second to that was Flux, and that is because the ZIL Core wallet makes it very easy to just use the Fusion, get it into a Binance Smart Chain or a BSC wrapped Flux, and then that can shoot straight over to crypto.com. So it comes in second, and then third to that, I think, is Ergo, because Ergo is going to be pretty easy with KuCoin. That being said, Ergo also has the potential for the crossover to Cardano, which is going to be, you know, if that does happen, it probably moves up in your liquidity as far as being able, or in your liquidation options, right? Then from an infrastructure standpoint, and this is just, I've been working on this chart and trying to figure it all out, but from an infrastructure standpoint, I put Ergo in first because it runs the coolest and uses the least amount of power, right? Secondary to that would be like Ethereum Classic, because it's just Ethereum and ETH hash, or it's technically ETC hash, but it's pretty easy to run, right? Compared to a lot of the other algorithms. Then pretty much everything else falls down below that, right? Because Flux is going to utilize some core, Ravencoin is going to utilize some core, and that's kind of where I put it as far as all that goes. So those are kind of the ideas that I've been working on. I haven't gotten the full chart up, but that's kind of what I'm hoping to see. All right. Chadwick's Racing says, Ask Tech SRB 1.01 improvements, 6650 XT, 25 megahash a second on ETH, and dual mining CAS at 100 megahash a second, 100% increase on CAS, and only a 10% loss on ETH. That sounds pretty good, man. Forever Metalhead says, Ask Tech Ergo seems to be more into smart pool kind of things as they are looking into creating more similar to GetBlock. I think what Ergo has seen is, well, GetBlock, I'll just tell you, like, as far as like mining innovation goes and proof of work innovation goes, Ergo and GetBlock, like, so Ergo as the chain, obviously, but really GetBlock has really innovated mining compared to any other network I've ever seen, right? Like, smart pools are absolutely incredible. The integration for tokens, it's the first time we're ever really seeing tokens care about proof of work miners at all with AnetaBTC. And now they're starting, you know, a lot of the other tokens from what I've seen that are releasing on Ergo are starting to talk to GetBlock because they're starting to see miners as basically as a positive to their project, because it gets miners to basically participate within their network, increase the volume of the trading, and obviously help with funding their projects. And honestly, like, even with like Ergo being so far down on the list on like what to mine, I am very bullish on Ergo, but I think all you guys know that. And that is not from any other aspect other than just that technical aspect of like what they're doing for the miners and how that is all functioning. It's absolutely incredible. Like, there's nobody else that's doing anything like it. That's just the fact of the matter, is like nobody else is doing anything like Ergo and GetBlock is doing, or Aneta. Like, there isn't anything. It's very unique, and I'm very bullish on it. Because you're going to end up being in a position where the entire ecosystem is built around the miners. And in the next bull run, everybody's going to be looking at like what projects survive the bear market. And they're going to be looking at things like Aneta. They're going to be looking at things like Ergo, and they're going to be seeing like this volume, like, why is all this volume happening here? It's going to be due to the miners, right? Not dissimilar from what ETH was when it starts hitting DeFi. Why? Because miners are mining ETH and they want to do something with their ETH to generate additional income. It's not dissimilar from Ergo, except now you're getting them to pull in and actually build up the mining community with them, not just having these tertiary like side things that are being advertised to retail, but they're also being advertised to the miners. Veganzo, there we go. 03 says, As I'm a tech, I just got a 1660 Super. I mine Flux. How much more hash rate does Mini Z Miner give compared to G Miner? Gives a lot more hash rate on pretty much every single NVIDIA GPU. Currently have AMD cards. It's about 20% more hash rate too, by the way. He says, I currently have AMD cards and I really want to get them to mine the same miner and pool. Not going to be a good idea with Flux. You don't want to use G Miner on NVIDIA GPUs for Flux. Max Barbell says, Ask Tech, I shut down my 5700s for heat. Can these run well on Ergo? I've never minded before. Can I use the same overclocks as ETH? So yes, you can use the same overclocks as ETH, and it's dependent on the memory. That's really the fact of the matter with the 5700s. If you are on Micron memory with the 5700s, it's probably not worth it. You're only going to get about 80 to 90 mega hash a second. It does decrease the heat though and the power. So there is that, of course, still. But if you have Samsung 5700s, those will do 100 to 110 mega hash a second, and those are killer on Ergo. But you got to split those up. Once again, it kind of goes back to the 1660 Super question, mining with AMD. Like, you're going to want to split up your Samsung cards from your Micron cards on your 5700s and run the Samsung cards against Ergo and run the Micron cards against something else. And it's a big difference, right? Once again, that's like another 20, that's a 20% difference between just what type of memory is on the GPU. Forever Metalhead says, Ask Tech, at the end of the day, projects will turn back to miners. In my humble opinion, we move coins around the most. And that's why I think that the strategy for Ergo and GetBlock and even like tokens like AnetaBTC is very strong, right? Like, you don't see Q1 bear market reports with that kind of transparency from token projects like AnetaBTC either, right? Zyg Miner says, Ask Tech, I took my RTX 20 rig off of Flux and tried to switch to Ergo yesterday. They're not very efficient on Ergo. You're getting 85 mega hash at 109 watts on your 2070 Supers. Yeah, that's not too good. I haven't tested a lot of 20 series on Ergo. I have always left my 20 series on Flux because that's what they're best at, right? We're not going to say put everything on Ergo. Like as far as like 2070 Supers, like Flux is really where you're going to be at. Max Barbell says, Ask Tech, I have both, so I guess I need to do some rearranging. Yep, pretty much do some rearranging. Like I said, throw the Samsung on there. Keep the Micron off. And you'll notice, like, as soon as you spin it up, you'll notice, like, your Samsungs, you'll be like, why are my Samsungs at 110 and my Microns at... That's what's happening, right? So... Ergo does need to fix their difficulty calculator, however that's functioning. I wish that would get resolved, but it is what it is, right? I have a meeting coming up at 2 o'clock that I got to get ready for, so I'm going to go ahead and wrap it up right here. Be sure to hit the like, comment, subscribe, and notification bell down below. At 6 p.m., we will be having another farm kind of vlog coming out, so if you're interested in that, definitely check it out. It'll be moving 5700s into a Octominer X8. I asked for my affiliate link. I do not have my affiliate link yet, so hopefully, we'll get that Octominer affiliate link up and running for you guys at some point here, and then we'll have some deals for you guys ready to go with the coupon code and all of that. We did pick up a new affiliate as well, and that is going to be with, let me pull that up here for you guys. I think I did the wrong... Oh, man. Hold on a second. I'll get it. Let me get you guys this link here. It's a new ASIC miner supplier, which is always good. Why is this not coming up anymore? This is my head on no sleep. Oh, I think it's in a different inbox. That's why. Yeah, it's with Coastal Crypto. Let me get you guys this affiliate link. Here we go. It's with Coastal Crypto. And these guys are pretty awesome guys. I had a phone call with them yesterday. Amigos PC in chat. You guys have probably seen him. He's part of it. And it says that page not found. Okay, so I'll talk to them about getting the affiliate link fixed for you guys. So you can just remove the SOT part. Yeah, I know. The actual affiliate link's broke. So I'll get that worked out with them. You can still use promo code SOT, S-O-A-T, when you order. Link is visible now. Did they fix it that fast? It's not visible. It's saying page not found for me as well. Anyways, it's Coastal Crypto. They have ASIC miners primarily. You can hit the shop and take a look. They sent over an S10. We're going to be doing a review on this hopefully here in the next week, which is basically two S9s put together, and that'll be a really fun one to take a look at. And so be ready for that review, and then we'll be talking about some more miners from them as well. Oh, link is visible now. Yeah, I don't know why, but it's page not found. We'll get it fixed though. We'll get it fixed. Technical difficulties. Thanks for watching, everybody. Be sure to like, comment, subscribe, and notification bell down below. And take a look at my test bench. It went away again. It's not working still. Oh well. I thought it recovered.